welcome back to goldstocktrades.com. Today we have a special guest back here with us today, Kerry Knoll. Kerry has co-founded many very successful, famous mining companies such as Wheaton River, Thompson Creek. He's 35 years in the experience, and today we're going to be discussing a new company, Generation Mining, which can be traded as GENM on the Canadian Stock Exchange and as GENMF on the OTC. Thank you, Kerry, for being here with us today and for introducing Generation Mining.
Thanks for having us on.
Kerry, you have 35 years experience. We've gone through a very tough junior mining market the past few years. A lot of investors are seeing very discounted values with the junior miners. You have 35 years. You've made some great wins in this space. Could you highlight about your background and how you have been so successful in the mining business?
Well, the strategy that I adopted right from the very start, I took my first company public in 1987, was to acquire projects that had been already explored, developed, what have you, by other companies. So using other people's money and trying to be strategic in terms of location and commodity. So for the first many years I was in the business, it was gold, and then in about 15 years ago, started diversifying into some other metals. And one of the things I can say that I'm very proud of is that every public company that I ever started, and that's been about 6 or 7 of them, has been taken over. And of those 6 or 7 companies, 5 of them have gone into production, which is a pretty unusual track record in the junior mining space. And the strategy, starting about 15 years ago, switched to trying to identify the metals that are going to be going up in the next couple of years. So the first one we did then was molybdenum. It was trading at about, I think, $5 a pound. And we started a molybdenum company, and that became Thompson Creek. And that company, within a year, the shares had gone from 10 cents to, I think, about $2.50. And molybdenum itself as a commodity had gone from $5 to about $30 a pound. And I've done the same thing with several other commodities, including most recently zinc. We started a company called Pine Point that Osisko took over last year. And I think we're doing it again with palladium, because when we decided to take the plunge into palladium, late last year, it was trading around $1,100-1,200 an ounce, and now it's up to $1,500 an ounce. So the strategy works.
Well, yeah, it certainly does work, and that's why it's so important for investors to listen to guys like Kerry that have been around for 35 years and have done this successfully, and get in early on his. And that's why we follow your stories when it's early. Let's discuss the palladium market. You mentioned palladium. This is your focus now before we get into the Generation Mining story. The palladium market, investors have seen it soar. The price has soared now higher than the gold market. It's trading like $100 higher than the gold market. There's a deficit projected. Could you highlight, is this bull run in palladium here to stay, or is it a short-term blip? Give us some of your insights.
The palladium market is arguably one of the simplest metal markets in the world, and it wasn't always that way. Palladium used to be used in jewelry and chemicals and various industrial aspects, and over the years it has migrated to being almost exclusively used for catalytic converters in cars. It makes cars cleaner, and so in that way it's a green metal. But more importantly, there's only 4 or 5 camps in the world that produce significant amounts of palladium. Sudbury in Canada, the North American Palladium, Stillwater in Montana. Those are the smaller ones, and then there's Norilsk in Russia and the Marinsky Reef in South Africa, and that's kind of it. So if you're looking for palladium, you don't have a lot of choices, and the problem for the car companies currently is that the world is not mining enough palladium to supply all the cars that are being made. And one of the reasons for that is because as emissions controls get stricter in China and Europe and places, India as well, they need to use more palladium per automobile. It's gone from about 3 grams per car up to about 5 grams per car, which doesn't sound like much, but that's a 60% increase in the last few years. So you got a situation where there's only so much palladium available, and where's it been coming from? Well, the stuff that isn't coming from mines has been coming from stockpiles. The ETFs of the world that hold palladium have been gutted by the car makers. The Norilsk, which was a big strategic holder of palladium because they used to mine more than they could sell, has been selling off their stockpile by millions of ounces. That's apparently almost gone. So I think that for the foreseeable future, it's going to be tight. If I want to put a fly in the ointment, I think the one thing that you got to consider is that there is one other thing that works in catalytic converters, and that's platinum. And platinum is cheaper per ounce, so some of the car companies might start substituting. That's a possibility. Of course, if that happens, then platinum's going to go up. So you've got a trade-off there. So and they've got to change their chemistry. They've got to do the experimentation. They've got to do all the testing, and because it's not the same requirements that there was 10 years ago for cars. They've gotten more stringent, and so if they're going to be switching to platinum, and by the way, platinum is already used in virtually all the diesel automobiles and trucks that are on the road as a catalytic converter. So it is about a third of the current platinum production in the world is coming from, or is going into diesels. So some of that might start going into automobiles, and that might loosen up the price a little bit. But it's going to be a mug's game for the car makers because if there's significant substitution for platinum, which is also in deficit, by the way, in terms of supply and demand, you're just going to see platinum go up, and they're not going to be any further ahead. I think if palladium were to soar like over $2,000 an ounce, I think you'd see some substitution. But I honestly don't see that happening.
So, Kerry, when you were looking to get into palladium, and I know this is what a lot of investors and junior mining investors were, can I find a good palladium developer, brownfield developer? And there's not many opportunities like that. And so could you talk to us about globally palladium, where to find it, and what you have recently focused on?
Well, when we started looking for palladium, things that really struck me was how few there are. Just, I try to look for a list of comparable companies. I can't find any. There's a couple of small Australian companies one of them developing a project in the same vicinity as ours, but that's not their main project. So you're buying into other commodities that they're also seeking. There's only 2 or 3 companies like us that are developing, and certainly in North America, I can only think of one other company, and it's got a fraction of the size of ours. So there's not much out there. If you like, I mean, it's not good to not have a lot of comparables to show that we're trading at a discount to the peers, but it's the fact that it is. There's just not much out there.
So tell us about what you're working on now with this recent deal, definitive agreement that you signed with $1 billion Sibanye company.
So Sibanye is for those who don't know it, is a major South African miner. They produce about 3 million ounces of platinum palladium a year, as well as significant gold. They have 100,000 employees. And they have grown over the years by acquiring other mines. They have never built a mine since the company came into existence. And they had this project, and they were wanting to advance it, but they're this is going to produce about 200,000. If it goes into production someday, it's going to produce about 200,000 ounces of palladium a year, and that's just not on their radar screen. So they were looking for a partner. We knocked on their door. It took us 5 months of negotiations and getting to know one another, and we're able to strike a deal to acquire. We're going to acquire up to an 80% interest in the project, and our goal is to bring it to production at some point.
So let's talk a little bit more about this project. What makes this project so unique, and talk to us about the work that has gone into it and where it's located and why it's so special.
Well, let's talk about a couple of aspects. One is location. As they say in real estate, it's important, and it is. So you've got 80% of the world's palladium production is coming from South Africa and Russia. So right away, you've got the car companies long-term are concerned. What if a future government in the United States puts sanctions on Russia? What if there's turmoil in South Africa, strikes, etc.? I mean, where's it going to come from? So our project's in Canada, and more importantly, not just in Canada, but it's in Ontario, which is probably the most active mining province in the country today. There's about 10 major gold and other mines under development in Ontario. They're getting permitted. We've got a conservative government who is very, very pro-mining. We've got a town. We're just outside of the town of Marathon. Marathon supplies the big Hemlo gold mining camp. And that camp it's produced 25 million ounces over the years and is running out. So the town is wondering what are they going to do to survive? Well, they need to have another mine, and we're the only advanced development nearby. So the town's behind us. The local native groups are behind us. We haven't signed any deals with them. We've just acquired this project, and in fact, it hasn't even closed yet. But we will be meeting with the natives and discussing our plans, and they'll tell us their needs and wants, and hopefully we're going to get along as well as they've been getting along with the previous owners. So we've got location, but more important, we've got size. This is, to my knowledge, certainly it's the largest undeveloped palladium project in North America. There are some larger ones in the world. There's one in Finland, one that's owned by a private company. There's Platreef, which is owned by Ivanhoe in South Africa. But again, in these other projects, the investment opportunities are either not available because they're private, or if they're available, you're buying into other metals at the same time as you're buying into palladium. We're what we would call a pure palladium play. We've got in our resource currently about 3.5 million ounces of palladium, almost 1 million ounces of platinum, and almost 1 billion pounds of copper as byproducts. So, but it's mainly 60% of the value of the metal in our deposits are palladium.
Well, Kerry, it's an exciting time for us to find this story. This is a pure play palladium story in a commodity that has been soaring and looks like it's going to keep on going that way. You're in a jurisdiction, Ontario is a top tier operating jurisdiction for mining near established gold camps, and we know your track record with Thompson Creek and with Wheaton River, and so a management team with a track record of success. So thank you so much for being here with us today. And for my subscribers, whoever is listening to this, please go to genmining.com, genmining.com. The stock is GENM on the Canadian Stock Exchange and as GENMF. Today we're speaking with Kerry Knoll, chairman of Generation Mining, who has a top palladium project in Ontario. Thanks, Kerry, for being here with us today.
Thanks for having me on, and let's talk again in the near future.